Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn & Associates with your weekend edition of our metals market update for this Friday, the 4th of May, 2018. Happy Cinco Mayo to everybody. It'll be a Saturday before you know it. Wow, what a stock market. I didn't see that coming today. I'm sure a lot of you must have, but I certainly didn't see this kind of powerhouse day at all coming in that, and it came out of nowhere. Strong market today. If you look at the metals, you're looking at very close to the settlement prices. The gold's going to be about 40 cents lower than that. Silver down about a penny from there. Copper just about on that number. And what obviously we're all going through is what's going to happen with China and what is going to happen in the energy market concerning Iran. Now, Iran is right around the corner. There's time for the Chinese deal, and we know that we're seeing our delegation come home this week. Word is that before they left, the Chinese were told we want $200 billion in reduction in our trade deficit. It's nice to want it. You can also read over the weekend that a lot of people are saying the Chinese may play it and look at it that President Trump's a one-term president. They'll wait him out and see what goes on. I mean, there's all kinds of talk from every angle that you can imagine. But come June 1, if the president holds to the line, there's going to be tariffs. We've got the same problem in Europe. The EU does not want to budge. Germany does. Germany sells a lot of Mercedes, Audis, I can go on in America. Their car industry is a target, and they feel it. The French don't want to do that. I don't think we sell that many Peugeots or Citroens here. So these are part of the problems that you're dealing with. And then there's NAFTA, of course, the other elephant in the room. So it all weighs on these markets. But let's go to the charts and let the charts do something of the talking. On a monthly bar chart, I think you'd agree. We have been going literally sideways in this market since 2015. You had one breakdown in the market where you got down close to the $1,000 an ounce level. See that? You've come back up recently into the 1360s. We've been running into resistance at the 100-month moving average at 1350, 170. And we have pulled back from that now with support if the market continues down. If it goes back to the 18-month moving average right here at 1276.70. The Bollinger Bands have kept the market constrained. Eventually, you break out of that. You will eventually get a move that either looks like this, or I'll step back even further, or breaks down. Staying on this sideways path, it's a question of time. That's what I view it as. When I look at a weekly area chart of closes, the market has a downside bias now because it closed under the 18-week moving average of closing prices. That's what determines to me if I have a bias up or down. In terms of what the thrust of the market is, it's recently gone from 1353.20 to 1312.30, and the settlement price for this week is not going to be under that 1312.30 level. When we look at just a bar chart, you get an idea that the market is just caught in the sideways action. When we take a look at the pattern, you have a pattern that had, and I'll take this off so you get to see this a little better, higher lows, higher highs. You didn't want to come back through this low right here and watch what happened. You did it. You got yourself down to 1315.70, followed through further this week. So you don't have a trend. If you believe that a trend is made of higher highs and higher lows for an uptrend or lower highs and lower lows for a downtrend, you don't have that. You have a market that is spinning its wheels. It's got a higher high and a lower low at this point. Because it's under the 18-week moving average of closes, that's what I call MAC, the next support, possibly, if it continues down, could be the 100-week average at 1277. The 200 weeks way down here at 1233.90. We'll see what it does. In terms of Bollinger Bands, what are they? Remember what a Bollinger Band is if you don't know. It's an algorithm designed to keep the market trading within 95% of the time. So often I'll see comments, they can go on our YouTube page or so on. You look, this week you're going to fall down $200 in the gold, blah, blah, blah. Well, it's not the easiest thing to get through these Bollinger Bands. You can run them, just like you did there. But you'll notice you get under them, you run back to the right of them. That's typically how it's done. Right now, all the market has done is fallen back to support. Now, if we look at this week's low, it was 1302.30. The Bollinger Band is 1306. The market went to it, held it, and got a bounce. That's all that you can say. Again, it's not trending. In terms of momentum, the momentum is down. So here's how I view the market. The market has got downside bias, downside momentum. It's not trending. It hit the first downside objective if you use Bollinger Bands as an objective in your trading. Resistance back up at 1330.80. I don't see anything on this chart that can turn it bullish at this point in time. And very frankly, you can't even turn it bearish if you're looking for the lower high, lower low pattern. So you're stuck with what you've got. For those of you that knew we had lost our ETFs for a good part of the week, we've got them all back now. And when we look at the ETF, we can see that, and it's, by the way, it wasn't our fault. It was the vendor's fault that I used for this. Higher high, lower low. Okay, no trend. Following the futures. Hits the lower Bollinger Band. You got as low as 123.39. You hit 124.06. You held it. Momentum down, bias down. If I took the names off the charts, they look absolutely similar. So let's go to the gold miners and see if we have anything. And in the miners, this is turning, at least at this point, if the market were to settle this way by 3 o'clock today, you're going to have a pattern of lower highs, lower lows, bearish. The market is trading above, right here, the 18-week moving average. So the bias changes. You get an upside bias. The trend is down, and momentum is flat to trying to point up. I'm going to call this market about as neutral as you can on a weekly basis. If it's an outside week down and you take out today's highs, early next week, and not today's, but the week's highs of 22.78, that could create what I call a bear trap and set the market up for a move that I'd be looking hard at 23.60. So I always look to see what an outside week does on a chart. On the silver weekly chart, like the gold, you're not trending. You have that higher high, lower low. Now, I think you'd agree. You made a run to the 100-week moving average of closes 2 weeks ago, failed miserably, came down to the 18-week, and then you kept, like in the gold, breaking through. If you look at the low this week of 1,600, and you're 40 cents off that low, the 1590 was the lower Bollinger Band. You didn't get to it. What else do you see? You should see the sideways action. So in the metal markets, what we seem to be doing is just churning sideways. If firms like Goldman and others, JP Morgan, are saying that inflation's alive this year, the commodity sector is going to be good, I would imagine somewhere, and this is only May, somewhere along the line, the metal markets jump with it. Haven't seen it yet. Copper is the easier market to understand in all this. Copper, about half of the world's copper is used by China. If the U.S. decides to get into a trade war with China, our market, if we start tariffing each other, is not that easily replaceable. Yes, Europe will want to do more business than everybody else, but we're the monster consumer in the world. Let's not lose sight of that. And the copper's now churning, trying to figure out what to do. If we took the name off, do you not disagree that we've got this sideways action in the Bollinger Bands? That's important. So from the bigger picture, the market's neither a bull nor a bear. It's got downside bias because it's under the 18-week average of closes. Momentum is pretty flat. We hit once recently the lower Bollinger Band, went back to what I call neutrality, the 18-week average of closes, and since then we've sort of limped along. For the week, the market's up 1.3 cents, not a very big deal. Another bearish metal market has been platinum. Lower highs, lower lows. Very different chart pattern than the gold, the silver, or the copper. The market has the 18-week average staying under the 100, and guess what? You just went to the lower Bollinger Band area. You got to a low of 893. That number's 889.60. So about $4 away. Hasn't hit it yet, but momentum is still laying down on this market. It hasn't bounced yet in any manner. The bears have control of that. In the palladium market, you had a bear market that ended 4 weeks ago. When you got to the lower Bollinger Band, you rallied back to that 18-week average of closes. If you watch my daily videos, you know I call that the line in the sand. Markets like to figure out from the 18-day average or 18-week average what to do next. And I'm going to have to view that as a resistance point. Now the question is, will the market slip away with it? And what's been hurting metals is this market, the dollar index. And the dollar index has been on fire. For the week, it's up a full penny. When you look at the trend, you've got higher lows, higher highs. Now, here is a dilemma. This is how the market looked when it tried to break out to the downside, and it didn't get any traction, started going sideways. Flip that thought around. The dollar's been on a bent to the upside. It closed for the first time over the upper Bollinger Band. You have to go back like here into 2017 in order to find another time. That's all of that. I'm talking not the beginning of 2017. I'm talking getting in the end of 2016 right into the beginning of 2017. So this market for the very first time is trying to bust through an important resistance zone. I've put the 200-day moving average of closes right here in light gray for you. This is the 100 in the green. Those could be the upside targets if the market falters at this upper Bollinger Band. Often, professional traders look at the first attack to the upside or downside of Bollinger Bands, and they take some money off the table. We'll see if that was in fact the case with this market or not. I would expect that we've seen a lot of short covering and that the open interest in this market might even be dropping back because so many traders were bearish the dollar at the beginning of the year, and that's a trade that just hasn't grabbed any traction. You know, if you like what you see here as I'm doing on my charts, all this work, I teach it all in a simple charting course. It's 6 hours of videos. It's going to teach you everything that I talk about here and more. I promise, a lot more. You will become very proficient in slow stochastics, Bollinger Bands, window envelopes, something we don't have time to talk about here, and how to use different moving averages with all this as your filters one after the other. You get the charting software, you get my advisory with it, you get the course, 6 hours of the course, the written commentaries, how to place numbers on the charts, and then a morning video. In the morning video, I review each morning 40 charts. So you're able to take what you're learning, and I will talk to you about the swing lines, the moving averages, and then a live webinar takes place, and you get that about every 2 weeks. How do you get all this? Simple. You can either call my staff or you can go to our website under www.iraepstein.com, go to education. And from the education part of it, what you will see is it explains all the facts. We have a fact sheet on it, how it all works. I think you'll find it fascinating. And no, you don't have to get anything sent to you. It's an online course. I've seen people try to sell things for $1,500, $3,000. $129 with the charting software and all. I think you'll find it well worth your time and effort. Certainly not expensive. If you take a look up here, you can click here and it'll take you right to that page as well. I'm Ira Epstein. I want to wish you all a great weekend, a great Cinco de Mayo, and I will see everybody come Monday.